See, I think I'll answer this question in a very similar manner than what I had said last time. See, we are in the business of 25-year cycles, right? We are infrastructure, we build an asset, we earn revenue for 25 years, and we continue building assets. In 25 years, you will see 6 US election cycles. You will see at least 3 such cycles of rate cuts, rate going down, rates hitting top. You'll probably see once in a 20-year event, like you mentioned, 1982. It's 40 year now, but 1982 versus this. And probably 4 years, we'll see 4 cycles of 25 years, we'll see one COVID. So the last one is 1920, the next one was 2020. So from that standpoint, I think we are very...
So you are oblivious to the rate cycle.
We are very focused on the cost of debt. But for us, the most important thing here is that when we are building our assets, we are building in a buffer in our equity returns, right? So assuming we are building projects for 20% rupee IRRs and the cost of debt goes up for 3 to 4 years or even for 5 years, then that 20 compresses to 18. The more important thing is not to be building assets at 12%. The companies which are doing these things at 12%, I'm talking rupee numbers here, they are taking a bigger hit, because when you go from 12 and you go down to 9, it is actually hitting a stage where you are destroying more capital, destroying value by adding an asset. You are better off by dividending it out rather than investing it. So that's the more fundamental issue, which I think is not really facing us. Fundamentally, how we look at all this is one, tactically, how do you handle it? Last year, this year, 2024, we did a lot more domestic bond issuances. We did a lot more domestic bank issuances. We did
the prices overseas are more expensive, or just
yes,
yeah.
Because where the treasury is, if you see, the rupee rates haven't moved as much. The treasury has moved significantly beyond our expectations as well. And because of this, and it stayed over there longer. I mean, it was expected last year when we were sitting, we were expected that by November this year, we should have been in the 2 to 3% range, or at least 3% range. We are now at 4.45. So after seeing 3.77, we are now gone to 4.45. So it is a market which we cannot control. So we'll not lose sleep over anything that we cannot control. That is one thing that is very clear. From that standpoint, be nimble, be always focused. What we've used this last 2 years for is we've strengthened our balance sheets significantly. We've improved our liquidity positions. We have taken what was a BBB minus, we've taken it to a strong BBB minus now. What was a BB plus is now a weak BBB minus sort of position. So effectively, we have now achieved a BBB minus rating from 2 rating agencies, Moody's as well as Fitch, for 2 of our, for a large renewable project portfolio of ours. So that's the first time in renewables that you're breaching the investment grade barrier for India, where India itself is BBB minus. So from that standpoint, the other thing that has worked tremendously, at least from an India standpoint, is in the last 6 months, the equity markets have been phenomenal. We've raised $2.5 billion of equity in the last 6 months. A lot of our peers have also raised a lot of capital. Vedanta, you mentioned, they've also raised equity. So what that does is that you use this opportunity where the debt rates are high and you can raise equity and delever rather than... So what we did in Adani Green was we had a 750 million bond which was coming due in 2024 September. It was widely speculated that we will ask for a rollover. Some private credit guys also approached us. The pricing that was being talked about was in the range of 16-18%. Eventually, what we did was we just put in money from the sponsor and we paid it off. And what that has done from an Adani Green standpoint is EBITDA has grown, debt has come down because the holdco debt is now out. And because of this, the net debt to EBITDA has come down by 200 basis points. It's very good. So that really has been our focus. I think looking forward, we think that 2025 will be much better than this year. We did do a bond earlier this year, but it's small. But we will look to do many more issuances in 2025.